So a lot to talk about today. A couple key things that happened last week, specifically on Fridays. You can see here with a lot of this volatility because of the Jackson Hole meeting. We did see a spike to the upside to retest the broadening wedge pattern we've been trading within on SPX. It retested the lower end because we have the blue line right here at the lower end, and then it also has this top end over here that's acted as a resistance. But we retested the lower end, had a hard rejection to the downside, actually went a little bit below my previous channel. There's two key trend lines that I'm looking at here. I showed you the broadening wedge. This is the lower end, like I said, and the top. But then there's also the previous channel we had been trading within, which is this blue line over here, as well as this blue line. So we had this downward channel. Price had been trading within it with a couple attempts to break out, as you can see over here, as well as recently over here, although each time it has been rejected. We also fell below the channel from over here. However, we also went back within the channel soon after. So it's had numerous breaks to the upside as well as downside, but it's acted as a magnet at the end of the day, and price just keeps going back within this channel. And we actually broke below, as I just showed you, on Friday, but it was unable to stay below very long, popped back up, and we saw more upside into the end of the day. So because of Wednesday's video, if you remember, I said any substantial dip, at least into Labor Day, so that first week of September, should be supportive and hence a buying opportunity for more upside. We did indeed get quite the dip all the way back to the mid 4,300s, and now we're starting a bounce up. We'll see what happens during futures tonight, but I do expect that there will be an attempt to break above the top of the channel. Remember the channel I just shared with this blue line, as well as the lower end being this blue line over here. I do expect there to be an attempt to break above the channel, and unlike the last time we had an attempt to break above, as you can see over here, which went into my red supply zone, I do expect this to be a successful attempt to break out and actually continue upwards, ideally past or at least into my supply zone up here in the red. If I'm reading this correctly, there should be upside, at least that upwards bias into end of month around that Labor Day time period for the first week of September before I attempt to short for more downside, because personally I believe there will be some more downside. Sub 4,300 should be on the cards at some point in September. However, you do not want to short early. This can definitely continue to the upside, especially because of what we've seen with the VIX so far. I still have that target of sub 14 to fill this gap from over here around 1390. We did have that hard rejection from my trend line as well as pivot around 1760 recently, and then we had continuous downside on Friday. There was a lot of hedging ahead of Jackson Hole just because of what we saw last year. If you remember, last year was like a negative 2 or 3% down day because of the Jackson Hole meeting. So there was certainly a lot of hedging ahead of this meeting, and I expect there to be more of a drawdown on vol, especially heading into this next week, which of course would be beneficial to the entire market as well as the S&P 500, which should lead to more upside. Again, we do have to remain above the lower end of the channel for that to remain valid. We had a little blip where it went below on Friday, like I showed you, but got picked up very quickly for the next hourly candle to be green. Regardless, there should be a nice attempt to break out above here. And speaking of breakouts, I do really want to talk about Tesla today. A couple things I want to share. One, this is a bullish structure on the 15-minute as well as 1 hour chart that I believe will attempt to fill some of these unfilled gaps from the previous downtrend that it had. Remember, Tesla, especially after aggressive downtrends like we saw recently, likes to squeeze a lot of shorts that piled on the way down. So right now it's attempting, this is a very, very simple trend line, but this is a strong close as well based on the daily as well as a strong hourly breakout. As long as it remains above this, yes, basic trend line, then there can be a lot more upside to attempt to fill some of these gaps. You can see high 240s as soon as early this week just because of this trend line. Sometimes trade setups are basic at the end of the day. It doesn't have to be too much behind it. A basic trend line can do wonders if price can stay above it, and I'll just fix this over here because we did have the trend line a bit too high. But as you can see here, as long as it can stay above this trend line here, there's a lot more upside due for Tesla. And another thing, the reason why I actually looked at it was because of the flow we saw end of day on Friday. This was within the last 20 minutes of the session. We saw a 19.9 million in premium call. This was just a bit in the money, but it was a close expiration. This is a ridiculous amount of premium. Super, super rare to see a print of this size in terms of premium. And then we saw some other ones a little bit higher. These just expired from last week, but 1.2 million in premium for the 240. So this was out the money. 240 strike, 922 expiration. So within a month, just about 3 to 4 weeks for that expiration. So both of these prints, super interesting to see, not even just because of the premium, but they were above the ask and fairly close to the money that we were trading. At least this one was close, just a bit in the money, and this one just a tad out of the money. So these are aggressive orders, and it's very rare to see this aggressive of an order heading into a weekend, and these have short-term expirations behind them. So this is actually what piqued my interest to look at Tesla's chart, and I understand why. They're looking for some type of either a gap up over the weekend because of this bullish nature of the close, or just a very strong open on Monday. So that's why they added before the weekend, and I could definitely see something like that happening just because we are above this trend line. As long as price can remain above this, we can see that attempt at closing both of these gaps like I just said earlier. So definitely something to watch for, especially because Tesla, like I said, can shoot to the upside and squeeze out a lot of shorts after an aggressive down leg. We've seen it numerous times already this year, so no reason that this would be any different. Just thought I'd share this one with you guys as well. And then another thing that I do want to mention is IWM. This is an interesting one to me, and one that has a lot of potential to the upside. It was also similarly to the S&P 500, it was within a downward channel. We have the top of the channel over here as well as the bottom of the channel. You can see it was respected as it continued to trade down until it made the break over here on August 16th, break down below the channel and continued a lot lower until it picked up last Friday, and then was kind of stagnant on this trend line, which goes back a lot longer. It is a downward trend line, very key downward trend line actually, that goes back to the February 2nd high. We retested it all the way over here in June of this year, and then we retested it recently. This is the first major retest, and it's had two bullish pickups so far. It picked up nicely on the Friday 2 weeks ago, and then also last Friday from over here. So both times had a nice pickup, potential double bottom scenario over here. It has the potential to go a lot higher. Also, just based on fib, we are within the golden pocket at the moment. That is the range over here. This green range is considered the golden pocket, right in the middle of the Fibonacci sequence. There's clearly a lot of demand around the 182 to 184 range, as you can see, because price just keeps getting picked up. You could see just based on the wicks on the daily, price keeps getting picked up every single time it retests here, and every time it also was able to close the weekly above this downward trend line, as well as right above the 0.5 retracement for Fibonacci. So this is a bullish setup, not only in the short term, but also the long term. I'm actually very interested in a longer term position around here, because I think it actually can go all the way back up to the highs that we saw earlier this year, the high 190s, potentially low 200s off of this level. This is a big deal that it's a major retest of a key downward trend line. There's also a convergence of the 200 and 100 moving averages right around this level as well. So there's a lot of support. Of course, does that mean it has to bounce? No, but probability is very high that it can bounce off of these levels here. So I'm interested in it. Again, could be a nice short-term as well as long-term setup off of here. It's definitely something to watch for, especially because it showed a lot of relative strength earlier this year, specifically when it broke out of this downward trend line in the middle of July and continued to the upside for quite a bit. So I'm certainly interested around these levels and just wanted to share it with you guys. But one last thing I do want to share with you is the dark pool levels here on Cheddar Flow. I like to do this every single Sunday video. Specifically, I'm going to filter for Wednesday to Friday on the S&P 500 to see if we had any large prints. And as we scroll down on here, you can see 1.6 billion, 1.2 billion, and 1.1 billion, all very, very close together over here. So we had almost 4 billion in premium around this 442.91 to 93-ish range. Definitely a decent amount of premium for sure around a small range here. So something you will want to look for, especially going into next week. This will act as a key level because it has, again, almost 4 billion in premium behind it. So definitely interesting. As we scroll down on here a little bit further, we can also see that we had 2.4 billion, 1.3 billion, and 1.2 billion. Very similar thing to what I just showed you on the last print. These were about 3 cents apart. And this has even more premium behind it because, as you can see here, we actually had over 4 billion in premium, almost 5 billion in total premium over here for SIG dark pool prints. And this is actually a mixture of both signature dark pool prints as well as singular dark pool prints, two different things there. But this is a mixture of both of them, a lot of premium around these levels. So right around that 440-ish level, you definitely want to see price stay above this for further upside, at least for short-term bullish emphasis, because this is a lot of premium around a small range, similar to what I just showed you with the previous one. And then the last thing to note over here, we did see 2 billion in premium at the 438 level. So nothing too crazy on that, but still 2 billion plus is something to look for. And as I go lower here, we had a couple mini 1.1 billion in premium as well as 1.3 billion in premium around the 436 high, 437 low range. But for the most part, the two ones you do want to focus on are the ones that I just shared with you, or we did have about 3-cent range between them. This one over here at 439.95 to 97, as well as the one that's a bit higher up here in the 442s for 442.91 to 93. Both of these ranges are going to be key. If price can get above both of them, that is certainly bullish for the rest of the week. And that wraps up today's video. Continue to watch the tickers I provided for this week, as well as the S&P 500. If it can break above this channel, we can see a lot more upside, but at the moment it is stuck within it. So do look for confirmation. Regardless, appreciate you guys watching this video as always, and I'll see you guys next time on Wednesday.